juggernaut, a huge, powerful, and overwhelming force or institution. That's the old definition. These are the words that best used to describe these days technology stocks. I mean, the biggest names in this sector have gone parabolic, lifting the XLK index to more than 13% year-to-date gain. In fact, the surge in growth in these names can be attributed to a number of factors. You got short squeezes, you got the herd chasing performance. But I will say one thing. Unlike the past, it is so much harder to complain that this rally is not about earnings, because the earnings proposition there and the potential are phenomenal. Unstoppable tech names right now include Facebook, Apple, Amazon, Tesla, Google, Netflix. Tesla's the only one on the list that's not really making money. Now, lots of frustration, though, with respect to how much money these tech companies are holding on to. And with Apple prepared to announce $250 billion in its coffers tomorrow, people are going to be upset. But let's face it, we can't take the money from them and we can't make them bring it back home. But they are borrowing against the money, and it's largely to buy back their stocks. So that's putting an emphasis on not only removing these repatriation taxes. I mean, I say get rid of them altogether, but also continuing to lower regulations. President Trump going to meet with the tech sector maybe this week. Meanwhile, tech driving the Nasdaq composite to a fresh all-time high. 172 names on that index hit 52-week highs against 42 that stumbled to 52-week lows. The enthusiasm, though, is best exemplified by the volume. Up volume, 81% of total. Okay, so without a doubt, buyers are very energized. But the rest of the market, well, sort of bogged down today. All of the economic data that came out today came in below the consensus. Consumer income and spending slipped. The ISM manufacturing numbers tumbled. In fact, in 3 key areas, growth is slowing significantly. The overall number, employment, and new orders, you can't have those things slow down. Now, there's no doubt that the stakes are sky high right now for the market. President Trump's second 100 days in office are critically important. For now, the Atlanta Fed is saying that this quarter, GDP growth will be 4.3%. That is huge. I'm at 3.5%, but let's face it, we got a lot of data out this week, including the jobs report, so all of that stuff is going to be rejiggered to a certain degree. Meanwhile, reaction in the aftermarket pointing to why investors can be so bedeviled. You had earnings out from some companies that match consensus. The companies have offered the same guidance or better guidance, and shares continue to get hammered over and over and over again. But I do have some good news for you. Angie's List up 41% in the after-hours trading. IAC perhaps going to take them over. There's talk that they're prepared to make a big bid. I got a list I'm putting together of all the potential takeovers in the next 60 days. Go to wstreet.com. I'll have it for you in the morning.